So let's talk about the confidence in trading. It's a very important word when it comes to profitable trading and consistency, but I want to go over the identity of a trader and a brief guide of building confidence as a trader. So first of all, to be able to talk about confidence, we need to understand what the word confidence in trading is. So let's define the confidence. The myth is that a confident trader is just like super profitable, and there is like a euphoria of like winning, and they're just like 10xing their account every single day. And if that happens, then this trader is a confident trader. While the reality is that confidence is basically self-trust in the process, and the process has wins and it has losses. So the reality is basically being disciplined, following the risk management, being consistent, right? Having a performance review, journaling your setups, analyzing the market in the pre-market, right? Having a plan for your trades and trade that plan when the market is open. That is the whole process of being confident as a trader, not just having wins and just making money. Because as a trader, you will have wins, you will have losses. Okay. You will see your account going up and you will see your account going down. You can't avoid it. That will happen. So if you just want to focus on the profit and winning to give you the confidence, you will fail. So if you focus on the right process and making sure you're doing the things that you should do, you will automatically build confidence. Okay. So the shift is from certainty in outcome to certainty in execution. So your goal is not having a certain amount of profit or having a perfect outcome. You don't know the outcome. As a trader, this is unknown. Okay. What we know is to have, if you have the right execution in long run, you will be profitable and you will be able to grow your capital. Okay. That is the reality of trading. So instead of being outcome driven, be process driven and focus on the execution. Basically, if I do the right thing every single time that I execute, that I trade, ultimately I will see the profit. Ultimately, I will see the results. Maybe not in the next trade, but I will ultimately see that. Another important concept is the word identity. Okay, so identity drives this performance that everyone is looking for. So you will never outperform your self-image. That's why you need to identify yourself clearly for yourself. All right. So if you think that you're a gambler, you will be a gambler. And if your self-talk with yourself is that I'm a gambler, I want to just make, I don't know, 1,000% in each trade and just like make millions in 2 days, obviously you're not telling yourself you're a gambler. But if you have these kind of thoughts, you're basically reinforcing this into your execution. But if you manage your risk, you will be basically a resilient trader who is focusing on the risk and just letting the outcome to happen, because the outcome is not in the trader's hand. So if you have the right identity and beliefs, that's basically 90% of the whole job. The rest will take care of it, which would be basically the trading results and the performance. So the whole goal is to engineer your identity in a way that you can become the winner. The winner as a trader is not a trader who just wins and makes money. The winner is a trader who is execution driven, who is focusing on their execution and letting the outcome to just happen. by the word winner, I'm not saying like you should win, or like that's the kind of trader that always wins and just makes money. So how to have this correct mindset? Let's engineer it. So the whole goal is to convert the values into identity code. So the values would be the discipline, the patience, the risk awareness. You want to have certain I am sentiments for yourself. Let's say I'm a disciplined trader who respects risk. And these are the same concepts and rules that I mentioned multiple times that you need to have in your trading rules. It sounds a little bit weird or stupid to just like write something like this and just read it every single day for yourself. But trust me, in long term, it will work. It will remind you of certain values that will ultimately help you to become consistent trader. So this repetition acts as a programming code for your brain. At first, it's a little bit weird and stupid, I know, but in reality, it will ultimately work in your favor because you're reinforcing certain values and repeating it for yourself every single day. And I'm not, by repeating, I'm not meaning like reading like a newspaper or anything like that. You wanna make sure you build these values inside your rules, and make sure you read your rules for yourself and remind yourself about the rules and actually follow those rules. That's the gradual process that we did talk about it multiple times before. Okay, so this is the whole goal of this process, is to engineer your trading avatar, your personality, your identity that you want to have for yourself. So if you repeat for yourself that I'm a disciplined trader, I will risk according to my risk management. And if I take, let's say, 3 losses in a row, I will leave and just will not take any trades, and repeat it for yourself, and consider all of these rules as your identity, and basically that all of these rules will make your avatar who is a disciplined trader. I'm a disciplined trader. Why? Because I have a plan in the pre-market. I analyze the market, I analyze the levels, I analyze the zones in the pre-market. I'm a disciplined trader because I have basically consistent position sizing structure for myself. I will not just randomly double my position sizing in random trades. I'm a disciplined trader because I set my stop loss according to certain rules that are according to the price actions, the price action and the critical levels that the prices are holding. I'm a disciplined trader because I have a 3 losses in a row rule that I will leave my desk if I have 3 losses in a row. I'm a disciplined trader because I have a rule that, let's say, I don't know, I will not take any trades after having maybe, I don't know, $2,000 loss for the whole week. If that happens, I will, even if it's, I don't know, Wednesday, even if it's Monday, I will leave and do not trade for the rest of the week. I'm a disciplined trader because after every single day I journal my trades. These are certain metrics that you need to have, or like practices that you need to have. All of these will identify who you are, what's your avatar. Now, if you miss one of these things, basically you're seeing yourself as another trader, and this is not the avatar. If you're not journaling, if you're not, let's say, planning for your trades every single day, every single morning, and whenever you see that, you want to get back to the avatar. You want to get back to your identity as a trader and make sure you fix all of those issues. All right. So let's do some risk analysis. The confidence is basically an asset, right? As a trader, it's an asset. If you have confidence, that's a really strong asset that can help you to risk when the opportunity is there, when there are A plus setups, A plus plus setups, when they are there. If you have confidence, that will help you like an asset and helps you to just manage your position really well, to be able to scale out, scale in, position size better, uh, depending on the opportunities. When the opportunity is present, you're not uh, you're not freaking out. You're not afraid of risking more. Let's say, right? That is a really important asset, and it helps you basically to be calm and steady. If you are a confident trader, you're calm, you're steady, you're not going crazy. Your heartbeat is not like to the roof after like the price goes in your favor or against you, because you're focusing on the price action. You're waiting for the price to confirm whether you're in the right side of the trade or your trade is invalidated. Okay, so if you're not confident, you're just all over the place. Probably have your heartbeat is I don't know, 1,000 per minute, and at the same time, you are going to be probably focusing on just the profit and loss and price and not focusing on price action. You respect risk and position sizing. You have long-term focus. This is the key. If you're a confident trader, you have long-term focus. You won't let one profit or one loss totally change your whole game plan for the day. And you're like, I trust my plan no matter what happens. I enter the trade. I trust the plan. I have confidence in this system. And the reason I have confidence is because I educated myself. I went through the incubator. That's the education. I asked questions, right? I back tested, analyzed the market, analyzed the strategy. That worked. I paper traded. That worked. I asked question. I asked for help. I analyzed the performance. I asked for help for a mentor, for me, for someone else to help me with analyzing my whole performance in backtesting, in paper trading. And now I started trading uh, with real capital, and that's gradually working. Why? Because I know the system works. Why? Because I know I can execute really well. Now I'm able to trade properly. That's a step-by-step process, and you can't jump from knowing nothing all the way to real trading, knowing nothing all the way to like, I don't know, paper trading. Doesn't make sense. You want to go through all of these. If you're not educated, if you don't know how to read the price action, if you don't know the technicals, if you don't know the fundamentals, if you don't know how to read the news and use it in your favor, if you don't know how to read the levels, you're missed. You're just lost. If you don't have a system, a strategy, you're lost. If you have a strategy but you don't have confidence in it because you didn't backtest, because you didn't paper trade, you're lost. So a confident trader goes over all of these steps one by one, as I mentioned. And then they will get this, they will have this confidence and they're like, I trust my plan. I know what I'm doing. I know that I will have winners. I know that I will have losers. But I know that in long run, let's say 100 trades, this works. That's the goal. Okay? That's how confident traders trade with confidence. On the other hand, arrogant traders, that's basically being an arrogant trader means that you're basically having like a liability. Okay? Rich dad, poor dad 101. Assets, liabilities. So they usually have euphoric and impulsive reactions. One profit, they're to the moon. One loss, they're dead. And their emotions technically controlling them. They ignore the rules and their leverage. they have, let's say, 100x leverage because they heard somewhere that that broker works really well. So because of that, they want to trade Forex or futures because of the leverage, and they think with leverage they can make money. Well, the reality is that you don't, if you don't know how to make $10, let's say, even consistently, you can make $100, you can make $1,000, you can make 10K as well, you can make 20K, you can make 100. You can do that. That having more money in your brokerage account won't make you a profitable trader magically. Like having more money to trade with instead of trading with, let's say, two contract that you probably should do, for example. If you just trade with 20, 200, 2000, doesn't really fix the problem. If you cannot control your emotions and if you do not have confidence in your system, in your strategy, and you can't just trade with normal position sizing. Let's say for someone, 10K is normal because they don't get emotional. For someone else, 1K is emotional. For someone else, 100K is just nothing and they can trade comfortably. I'm not saying do not trade with bigger position sizing or capital. Depends on your capital. Depends on how much money makes you, how much losing makes you emotional, right? That 2% shouldn't be too small, shouldn't be too big for you. But as long as you are uh, you're comfortable with that amount, if you just trade with more capital, doesn't really make sense. Doesn't really fix anything, right? It's just like more money without any system, without any strategy, without any win rate, without a clear reward risk ratio process, without any KPI overall, and it's just like wasting money and losing it ultimately. An arrogant trader needs to be right. They don't accept loss. Loss? No, I can't accept loss. I should be a winner. And the mantra is that I can't lose. So what happens? They keep hold losses for a longer period of time. What happens? They add to their position and just dig a deeper hole for themselves as the price is going down. They buy, and then suddenly they're down, let's say 10K, and they have to get out of their whole position, and they're just like all angry, loud, and they start to revenge and all the other emotional, basically, roller coaster actually does start happening. The market rewards confidence, punishes arrogance. So you want to get here. You want to have an asset for yourself. Basically, you want to be the asset as a business owner, as a CEO of your own trading business. But to do that, you need to go over the process that we do mention, step by step. You skip it, you skip one of these steps that I just mentioned, you will be here. Just skip one, I will guarantee you will be here. Because you can't fix the execution mistakes if you don't paper trade. If you don't know anything, well, you're not educated and you're just like, I don't know what you're doing, but that's obviously not the case for many of the people, many of our traders, right? But if you do know what you're doing, you need to build muscle memory. You need to stay in the market. You need to watch me trading live. You need to go on backtest. You need to paper trade. You need to journal your trades. You need to analyze your performance. You need to see what's going on, what's wrong, what's a strength, what's the weakness. You need to ask for help so that you can gradually improve. All right. So let's talk about two case studies as an example. This is a very typical example that I usually do describe. Let's say we have a pro and we have another trader who's a fragile trader. The pro trusts the process, compounds small wins. Small wins actually do matter, especially on the days or on the weeks that the price action is not really that clean. These small wins or sometimes even small losses matter a lot because you're basically letting your account to just almost stay there with just small wins, small losses, and getting ready for an actual move that will just like boost your whole account. That's the pro. Confident, trusting the process, position sizing according to the rules, and then letting the small wins actually matter. What happens to a fragile trader? They just make some money and then suddenly 10x their position sizing. They have a massive profit, right? The next trade, they saw this work, they make it 15x, right? Their position sizing is just locked suddenly to the roof. They lose it, boom, all the way back down. They lose all the profit of the last trade and the profits of the last 2 weeks. So, and then again, they risk a little bit less. They make a lot of money, and then again, back in profits, but then again, risk. So they have big wins, big losses. Ultimately, this crashes. This is not consistent. So the crisis method is one of the important factors that can help a lot of traders build the confidence, because no matter what kind of trader you are, sometimes crisis happens. Sometimes uh, you're not in your like highest performance, and you might take some wrong trades, or the market might go against you like randomly. For example, it happened last 2 weeks that we had a couple of uh, tweets that suddenly the price jumped, moved higher, lower. That kind of sucks, but at the same time, it happens in the market, right? You need to be prepared for that. And that's basically the crisis management. So you suddenly sometimes might have a bigger loss compared to your normal position sizing loss. Now, in these scenarios, you want to be able to manage the crisis. Okay, you want to have immediate action, stop trading, do not revenge trade, and follow the process, journal your trades, and basically analyze your whole post trade uh, performance, right? You want to see whether it was your error, was it the market variance, was it the sudden random news, was it the position sizing issue, was it risk management issue, was it not seeing the higher time frame and big picture issue. You want to really be objective and analyze and see what the problem is. So, and then you want to get back to certainty step by step. Even if you're basically just starting out, this whole concept again totally makes sense. So if you're a beginner, you want to start with paper trading, or if you have a big drawdown, you want to go back to paper trading for a short period of time. If you've been trading for more than maybe 1 or 2 months, well, you shouldn't technically do that. You want to just go to the next step and do some micro size trades. So reduce your risk, reduce your position sizing, so that you can gradually uh, get back to profitable trading and get gain the confidence gradually. Then you want to have process goals and focus on the execution for a while, and then finally the trust will be rebuilt, and you can compound and get back to your normal position sizing. This is the practice you always have to do. If you're if you made a mistake, if you went on a tilt, you made some mistake, you lost money, you randomly make a stupid trade, you did not follow your rules, right? Everything that you're identified by, right? The identity of the trader, the first concept that we mentioned in the beginning of the session, right? If you did anything wrong, come back either here or here, depending on your level, and then start back up. You want to gradually get back up so that you can continue the progress. Don't just go and start like right here, because if you don't have the confidence, it will be really hard to trade with peace of mind and basically trade with technically with confidence. Uh, Talking about confidence, it's really important to understand the psychological capital as well. A lot of people talk about the capital as the money that we accumulate, but the mental capacity is also like a capital, right? And if you want to make sure that you're taking care of that capital, You want to take care of the deposits and withdrawals. Okay, just to understand this concept a little bit better, I wanted to just analyze this by giving you two examples. The deposit to your psychological capital could be the disciplined execution, the small wins, the patience that you have. These all will be deposited into your psychological capital. This will boost your confidence and help you to grow a lot better. Now, the withdrawals would be the broken rules, emotional outbursts, or like impulsive entries. This will just destroy your whole confidence and withdraw capital from your psychological capital if you just consider this vault like as a psychological capital for yourself. Think about it, right? We always want to focus on the money aspect and have more deposits into our pockets. But the reality is that if you just take care of your psychological capital, the money will be just an byproduct. Okay. What you can control is your own psychology and your mental capacity and psychological capital. If you take care of that and you actually do have a system and you educate yourself and you know that what you're doing, the money will follow you automatically instead of you trying to chasing it. It's pretty much true for any kind of business and in whatever you're doing in life. But it's very true in trading as well. You can obviously see it very clearly. Now, another important topic that I mentioned is the power of small wins. This is very underrated. The small wins actually do matter. Yes, we want to have either large wins or small wins or small losses or break evens. Okay, yeah, that's the goal. Obviously, you want to just avoid big losses as a trader. Yes, obviously, we know that. Okay, so these are the losses or wins. So this is small win, small loss, break even, and this is the big win or large win. Oh, I mentioned. So big win, small loss, break even. Okay, so that's the goal. But the importance of small win is that it can be a positive feedback. Even though it's not big win, it still can be a positive feedback if you just can consistently have these positive feedbacks and small wins for yourself until you don't have these big losses. That can automatically help your whole account to just stay almost there flat with some small wins, small losses. They will be break even, and ultimately you will not be winning that big, you will not be losing that big, but you're maintaining your capital and you're maintaining your confidence level. Okay, and you're maintaining your discipline level as well. This is very important because the market will not giving us opportunities every single day, right? Some days it's choppy, some days it's the moves are not really that clean. You might catch some moves here and there. Some days you will have those big wins, right? And as long as you can control the big losses, the small wins can be really beneficial, boost your confidence, increase your discipline, and basically help you to win more. Because with big wins, you will have more confidence and you will have more trust in your system. And you're basically getting ready for that big day when the market is giving us like massive opportunities and can help us to just increase our position sizing and take advantage of it. So confidence is built on the accumulation of everyday victories, not just lucky jackpots. So think about it. Okay, don't underestimate the small wins. And finally, the routine, as always, very important. The pre-market, identity affirmations and visualizations. We're talking about the psychology, obviously, all the technical concepts and technical practices that you need to do in the pre-market session. You need to do it, but you need to take care of the rules and visualizations. And when I'm talking about visualization, I'm actually talking about like literally visualizing certain scenarios. Okay, so just close your eyes and visualize a scenario that the trade is going against you. Let's say you entered short here, the trade pushed back down, you then exit, and the trade's going against you, and it's almost hitting your stop loss. Visualize it and think about the fact that here I should hit on sell and follow my plan. Even though I'm wrong, even though on the first trade I'm down, let's say $100, $1,000, doesn't matter. This is according to my position sizing and I'm following my rule. Okay. So you want to visualize certain scenarios so that you are prepared for that when the market opens. The same for the winners. Okay. The price is going in my favor. I'm scaling out. It's going in my favor. I'm scaling out. Visualize it and monitor your whole heartbeat, your whole thought process at the moment. During the market, you want to have hourly self check-ins. So check in your emotions, your heartbeat. We did talk about it before in depth. And post-market feedback would be the journaling and reviewing your identity and reviewing the whole, obviously the identity alignment and the whole trade alignment with your whole system as well. As always, a great book would be The Trading in the Zone by one and only Mark Douglas. Amazing book. The consistency you seek is in your mind, not in the market. And the pillars of certainty, as we did discuss, would be first, basically, the asset would be the confidence that you gain by consistency. The driver would be the identity that you define for yourself and you know about yourself. And you want to avoid the arrogance so that you can be confident. And the whole goal is to take care of your psychological capital by following your rules. Okay.